So I'm one of the co-founders with Dennis O'Connell, and you may notice something from both the slide I've put up and from the lovely weatherman background I have with me. In that, spoiler alert, we are changing from Starlight Wealth to Starlight Advisors. Why? What we've found is it better reflects what we are. We're more of a trusted advisor to the SME customers we have, both for their business cash and for their personal investments. To that end, phrasing it as advisor rather than wealth worked much better. Secondly, we're all Irish. Wealth is something that someone else has. We don't feel it applies to us. So in Wisha, we're only getting by. So in that instance, let's stick with the advisor side of things and move on from that. Now, what is this morning about? The title of this is The Keys to Maximizing Profitability and Why Firms Fall at the Last Hurdle. What this is really about is the assets that people have and that they don't realize what is a real asset and what should be giving them return. And what do we mean by that? Well, I go back to an event I was at some weeks back. And there was a life coach by the name of Morris at a Dunleary Chamber of Commerce event, I'd say about a month ago. And at the end of the sort of meet and greet, he posed this question to us. What is the most economically beneficial task per unit of time that you perform in your business? Have a think on that. Can you come up with an answer? Highly unlikely. Can you come up with an answer by close of business today? Highly unlikely as well. And in fact, you'll still be racking your brain come Fridays. What's the thing I do that I get the most benefit from? What earns me most money from the effort I put into the business? I can't work this one out. So what I want to do in this webinar is help you come up with an answer much quicker. You've got a business. And what's in that business? You've got a great product, you've got fantastic staff, and you've got cash and balance sheet. Brilliant in every case. The fantastic product, what does that do? Well, this allows you to be a welcome phone call both to your existing customers and your future customers. They know how good you are. They know how good your product is. This allows you to maintain margins and also, very, very simply, allows you to be the profitable business that you are. So that fantastic product, that is an asset that produces you money. Next on, staff. Your staff are your bridge to your customers. The staff are the people that produce your product. Without this, you wouldn't have a fantastic product. So directly or indirectly, your staff make you money. They are an asset and they make you money. And that leads to the third one. All of this great work in producing a great product, having a great team, give you some cash. And what does that cash do? It costs you money, because it's sitting in a bank account, you're paying your online banking charges, and you could have significant balances throughout the year. And you're staring at it and nothing happens, and you're not earning any money from your cash. And that doesn't make sense, because you're in business. Primarily, businesses are profit driven at the end of the day. And what do you get those profits from? Your assets. But this one most obvious asset is giving you zero return. What are you going to do about that? Well, first of all, look at the best examples. What do the big guys do? What do Apple and Google do? Closer to home, Ryanair, UCD. You think, boring institutions like that, my God, they can't be exciting in this front. Well, they are, because they think about it from two aspects. They've got a lot of cash, so they need to diversify it, and they need to make a return on it. And then you look and say, well, they come up with policies on this. And so apologies if you can't see this very clearly, but this is UCD's treasury management policy. And it's very interesting the way they divide it up, because people don't think about cash like this. Cash is like any other investment. You should diversify. We say, hang on, it's the money in the bank, it's safe. Well, we've all lived through 2008 and then 2011, etc., with the Irish banking crisis, etc. What happens to that cash? Well, you go to the bank, you put the cash in the counter to deposit it in, and it stops being your cash. It's now an unsecured loan to the bank. And that's the way you've got to think about it. It's now your risk to them. So if you look at UCD's policy, now that becomes clearer, because they say, well, hang on, Irish banks, you know what? I'm not willing to have more than 70 million of my cash with AIB or Bank of Ireland. And PTSB, guys, you have a lovely product, but you're a triple B rated bank. I'm not giving you more than 20 million. But then you look to the top of the list, and what are they doing? Money market funds. and they have a limit of 125 million to put in money market funds. Why? Money market funds do two things for them. To give them embedded diversification, because by nature of what they are, a money market fund is diversified across dozens of deposits and like instruments. And secondly, even though UCD or Apple or any of these guys, they're a big guy, sometimes it pays to go to a bigger guy who is an expert in the area to get you the best rates. And that's what money market funds are about. And you say, well, that's all very well, Alex, but like, I'm not Apple. Well, think about it for a second. Let's look at Apple themselves. What do Apple actually do? They've got cash in the bank. Apple last year made $180 billion. $2 billion of that was interest. Tiny in the scheme of things, like barely 1%. But here's the thing. Apple have 164,000 employees. So as a firm, that's profitability of over $1 million an employee. Apple have a little unit called Braeburn Capital. I love the pun. That is Apple's in-house treasury management team. When I looked it up, Braeburn Capital allegedly have 4 employees. Now, that sounds a little small to me, so I multiplied by 3 to account for risk and operations people. Brings it up to a dozen. That means Braeburn Capital, their profitability is $166 million per employee. That's some number. And why did they get that? Well, Apple think very basically, Apple sweat their cash. They've got cash in the balance sheet. They've got cash flowing through the business. Now let's find the silo that fits you. You may be a firm that survived the last crisis and says, you know what? I'm never letting the risk of that happen again. So you remain overcapitalized to provide for any future threats. You may just be sitting on retained profits. You don't want to distribute yet. You may be a landlord with lumpy cash flows and a sinking fund. You may be a developer or investor who is looking for projects but isn't able to deploy all their capital right now. So while you're waiting, this is what you do with your capital. You may be a startup who's raised money in the market to see you through the next 2 or 3 years in your business. Well, this is money that you need to look after. You're not Apple, but you've got resources and you expect to get a return from these resources. So be your own Braeburn Capital. I like to call mine Granny Smith's goodie bag, sticking with the Apple puns. You can do this. How? Because we provide at Starlight Wealth a desktop application, and 2 minutes a week of your time will allow you to be your own Braeburn. 2 minutes a week, that's 104 minutes a year. So let's round it up to 2 hours. Even if it's only 20 grand that you manage to make in interest over the year, you say, wow, that's straight to the profit line. And you ask the question, is it worth the effort? 2 hours, 20 grand, 10 grand an hour. If your charge out rate for your staff or for yourself is less than 10 grand an hour, well, this is a huge win. And if it's more than that, please, I would like your job because it's way better than mine. So what I want to do here is give you the ability to be your Braeburn Capital, and that's what Starlight Advisors are all about. At the start of the webinar, I posed the question, what is the most economically beneficial task per unit of time you perform in your business? If you become a client of Starlight Advisors, you can see very quickly what the answer is. And on that note, I'm going to stop my jibber jabber and hand it over to the floor. So if anyone has any questions they'd like to ask, unmute yourselves, or if you want to type it up, whatever you feel like doing.
Alex, tell us about your ideal client type to work with.
So what we see in general is the bulk of our clients are SMEs. They will have sitting on balance sheet or flowing through their bank account anywhere from $250,000 to upwards on 50, 60 million euros sitting there. Why does this fit in? Our ideal client doesn't actually have a full-time treasurer. They'll probably have a CFO. They'll definitely have a financial controller or something like this. But at the end of the day, the CFO like a chief technology officer or anything like that. They're a jack of all trades who know about all the factors that they should be doing, but need to find the man that does that or the lady that does that. So go to the specialist who can help them with these problems. So our ideal client is exactly that. And in many instances, what we see is clients will come via professional advisors that they're dealing with saying, okay, I'm CFO here. I've got a problem. We've got loads of cash. I'm getting nothing on it. What can I do? And they say, well, Starlight Advisors offer this product. This is what you should do. And interestingly, we do have some retail clients as well, but being straight up, retail these days, oh, Bunk, Raisin, Revolut, why would I go anywhere else? If you're a corporate, you cannot go to these ones. Simple fact. How to get sacked really quickly as a corporate treasurer or CFO. Guys, guess what I've done with my money? I've put it all in Bunk. It doesn't work. So for corporates, you need that safety valve. And what we find very quickly is that because of the instant access that they have with this account, any corporates that sign up, we see the financial controller really excited really quickly because they're seeing the interest earned on a daily basis in their account. They also know that, okay, I've got an invoice I've got to pay Friday week. What do I need to do? And it's easy. They go online, go into the app, press the withdrawal button, and the money is there in cleared funds for them to send on the following afternoon. So, it's such an easy use, quick use of their time that helps them manage money. And it's a feather in the cap because what we see in many of those businesses as well is that everyone complains about the cost of an audit. Can we pay for your audit? Because that's what having this as a product will do. Everyone sees the financial controller as a cost center. How can we turn them into a profit center? This is what you can do. So that's where our ideal client sits in, where you have a professional financial controller or CFO, but you're not at the treasurer level.
Thank you.
Thanks. I'll just come in for a quick one, just to following on that question. I mean, I think you've answered it well, and I think a lot of the points you made are very valid. But in an ideal world, let's say, taking a sort of a 2 to 5 year sort of view, are your current type of clients that you've got, are they really your ideal client? Or if you had a blank page and you were able to pick off someone, rather than if it's not an SME, if it's a family, or it's an individual, or let's say it's just a wealthy person, whoever they are, do you think not what Starlight's piece of the pie is, but do you know how much liquidity they need to have, or net worth, or is there any of those? Do you have any sort of metrics around? I'd like some people who are worth more than 100 million, who have at least 20 million of liquidity, who use maybe a private bank, maybe one of the brokers, whatever else, and we'll offer a higher level of service and more expertise. And obviously, you've run money, for a long time, and you understand it from a macro point of view, and obviously the world is a volatile place at the moment. So yeah, so is there, not sort of, let's say, not preaching off the the sheet to say, well, this is what we have and these are great clients, and I'm sure they are, but who would, or what areas would you like to expand? I suppose. Long question, or short question made long.
Not at all, Dave, and much appreciated. So you can divide our business effectively into two parts. This fits into the SME treasury offering.
Yeah.
And beside that, we have a wider investment offering. Now, the wider investment offering gets into risky product. That could be bond, that could be equity. We are 100% liquid and listed. That is our basic focus. If I go back to treasury for a second, the answer there really depends on the size of the client. For the vast bulk in the SME space, if we're looking at tickets between $250,000 and 10 million, the discussion will be around the money market funds. It won't go beyond that. When we're looking at larger than that, then it becomes much more of an outsourced treasury management discussion. And what we do there is there's so many solutions. We look at this to begin with, which is about money market funds. Then we say, well, what are your exact liquidity requirements? Because we can expand on the money market funds, yet stay safe. We don't want capital at risk because we understand that this is to be invested into other projects. But what we can do is look at short-term bond funds. We can look in the IG space or whatever else they might like. And in doing this, we can enhance the yields they can get. Now, the next question after that, and this is always for a treasury management perspective for even SMEs, many companies in Ireland, unlisted companies, family-owned businesses, family offices, wealth management businesses, they have a cash management requirement, yes. They also have a return from risky asset requirement. And as far as we're concerned, you saw that one pager from UCD's treasury management policy. That's something we do for clients. We put together treasury management policies, but I'd call it more of an investment management policy. How much capital do you have that needs to be absolutely guaranteed? Next question on, how much do you want to make from your broader pool of capital? And in that broader pool of capital, how much are you willing to put at risk to get there? So this is where it falls much more into the family office side of things. But in Ireland, as you well know yourself, Dave, there's a really blurred line between my day-to-day business and my family office, because I think many proprietary directors don't differentiate them too much. They see that pool of money as theirs in so much as they can.
Yeah. No, very true. Very true.
Does that answer your question?
It does, yeah, no, it does, absolutely. I mean, like, and I can see that as being, I mean, I like I think what you do and, what you offer, I think is a very valuable service and whatever else. I mean, I think the area that people are still underserviced from are the family offices, without going to some of the international players who swoop in and swoop out, aren't living here, and they'll meet you the day that they're here in that month if it suits, and that's kind of it. I mean, like, I know myself from having run a few family offices and then tried to manage a few wealth management businesses. There is a huge, it's low-hanging fruit to actively manage your cash and trying to get up to, getting a return on it, as you say. Like, it's not a big percentage of a figure in relation to adding to Apple's profitability, but it means that they're doing something with it. And even if it is only 10 people or whatever else, they're adding a lot of value. Like when I was in RBC and running their business here in Ireland, it was bang at the time you're talking about, when the Irish banks were all almost, offering very low rates. And we had a service that we went out, and it wasn't on RBC's balance sheet. We managed, big people's money, like these are 100 million plus type accounts, and we'd pool them together to try and get the best rate. And there was some counterparty risk, but we were spreading it amongst, maybe 10. They weren't AA rated banks, so RBC was a AA rated bank. We'd go down to single A and to try and pick up some yield. And now this is a vastly different time, so it was 7 or 8 years ago. But to get another % or 2 on your cash made a difference, So, and we didn't make much money from it, but it meant we got a look inside the tent, and we got the potential to pitch for investment business or other lending business, So yeah.
Absolutely. I think what we see, and sorry, we're going a little over time at this stage, so we will finish up soon so you can get back to your day. But what we see, and you'll know about this very well, the Irish family office, come the Irish high net worth, etc., the way they manage money relative to what the international flavor would be is very different. Like the international standard for family office money, first of all, you're starting at $1 billion to begin with to justify setting up the unit. And secondly, they will have at a max 1/3 in illiquid product. They'll have 2/3 in liquid listed products. That third of illiquid includes property. You come to Ireland, the family office is starting at 1/20th of the size, and everything's going into property. Yeah. So it's a madness in its own right, but I'll stop throwing stones at Irish people in bricks and mortar. I don't think there's any point in that. But I think one thing that does come out of it is the IRR perspective, because, from a finance 101 perspective, I think people have been sold a pup with the internal rate of return concept, because we've got this great project, give us committed capital for the next 2 years, project starts after 2 years, you're in there for another 2 years and then waiting for a year to get your money out. And you're told, you made 20% return. You didn't, you made 7% annual return. So at least when you've got people who are investing in property, we can say, we can be part of your solution. We'll up your actual amount that you can make on this, for the simple reason that you're sitting waiting for the ideal project. Earn some money while you're doing that. There's lots of things you can do. So that's part of the solution on that. In relation to your question there, Colette, the minimum we do for businesses is 250K. Two reasons on, is it a random number? Yes and no. I posed the question, when is it worth your while? At that level, you learn enough interest to make it worth your while. And from our perspective, as you'll all know, opening a business bank account or anything like that these days is rather tedious. So to get over the administrative burden of doing the actual account opening and for it to be worth the client's while, we sort of felt that was the minimum amount that worked. There is no maximum amount. That is the good thing.